retweet it or tweet it out?
Yeah, yeah, we did tweet it out. Let's we can retweet it again. And let's see, we should be going live any moment now.
All right. Ready?
Not yet. Let's see. Yeah, we did tweet it out. Let's okay, sounds like we got a little bit of echo on. Yep.
All right. Huddle, huddle, huddle. Save, save, save. Build it, build it, build it. Sound money. Sound money. Hello, guys. Are we here?
All right. We're live. Yes, we're live.
Okay, great. This is Ugly Old Goat here, and I am honored to have one of my favorite superheroes in Bitcoin, Samson Mow. And we also have, I don't know what your title is, Alan, but you're kind of the managing director, right, of this new token that's registered on the SEC. Yeah. Right. And I wanted to, before we begin, I wanted to direct everybody to my mentor, who is E.C. Harwood. And he was a big gold bug and is really my mentor on the history of money and what sound money is, what sound banking is. And he, in 1974, he wrote The Money Mirage, where he outlines the 3 greatest swindles of all time. And of course, the number one, I think every Bitcoin holler would understands, and that's inflation. It is definitely the biggest swindle that's ever been devised by man. And then the second one is Social Security. But the third one was very surprising, and that was the SEC, or the Security Exchange Commission. So I'm going to issue a real challenge to you guys. Basically, Ethereum is by us. I'm a Bitcoin standard bearer and not a maximalist, but basically we consider a shitcoin. How do you, my question is, can you build something on shitcoin with the blessing of one of the 3 greatest swindles of all time? I just read, who was it, Lop's article. He said, yeah, I just about lost everything, all of my savings, because of SEC shenanigan. The same thing happened to my mentor, E.C. Harwood, where, you know, he was running basically he was got people into gold legally before gold was legalized, and the SEC did their best to shut him down. They failed, but that was the thing. And so I'll leave it there. I'm going to just start out with one. Because of whoops.
Sorry, just
okay. My mentor, EC. So I'm just to start out with one question that I'm sure you both can answer. Is INX better than Bitcoin?
No, of course not. I mean, the funny thing is we're not competing with Bitcoin. You know, I mean, it's this, you know, we started this process 3 years ago, and yeah, we can trade war stories about the SEC. I mean, you know, it was an absolutely grueling process. So we did, I think, 12 rounds of back and forth drafts. But when we started this process in late 2017, we had literally 0 other options for the rails to run our token on. You know, we decided the regulatory path, for better or worse, and to do that, you need AML KYC, everything that Bitcoin really isn't. You know, we don't claim to be decentralized. You know, this is just a token we're running the rails on. So there was no other choices except for ERC20. And what happens is once you get going down this lovely process, you just get further and further kind of painted into a corner with your choices.
Well, let me illustrate. I had the same problem before. Most people don't know this, but I'm old enough that before there was a CFTC, I was a commodities broker. So that was in 1973, and the CFTC was created in 1974. So I had to register as a commodities broker to earn a livelihood. And then later on, they came out with commodity options, and I had to get my Series 7, you know, so I could sell the options, and I became a Series 7 stock broker. So I understand those kind of problems.
Yeah, I think the CFTC is considered the cowboys of the regulators.
Right.
They're like the relatively easier ones.
Okay, so I was forced to do that, and were you forced to do this, to use Ethereum and to be registered with the SEC to do this? And, rather than take an approach, well, like two of my heroes, which is Arthur Hayes from Bitmex, or Pablo Gonzalez and Ben Peterson from Bitso, who are entrepreneurs that created viable exchanges, reputable exchanges, and they assumed all that risk themselves.
Yeah, I think you have two paths you can go in the exchange platform world. I mean, you're either going to go regulated or you're not. With my background with GE Capital, Capital One, and Merrill Lynch, my background was in regulated. That's where I can apply the best expertise, from what I knew. Especially in the U.S., it's near impossible. You can't have an unregulated exchange in the U.S. So for better or worse, we took this path. The SEC didn't force us into Ethereum, but it was the only option, like I said at the time. So the only option was ERC20. That's what they were familiar with. That's what could run a smart contract with whitelisting. And by the time like a liquid came along, I don't know exactly at what point it would have been like a viable candidate, but
this year.
Yeah, but so you become so invested in the process, and it's so expensive and so grueling that changing direction mid-course is virtually impossible. And it would have been like a total disservice to my shareholders, quite honestly.
What's the advantage of using a blockchain?
And we'll get into a lot of these questions as well. If you want to give a little quick intro into that, we'll get into a lot of these questions. Actually, you know what? Before we get into that, let me just kind of ask you guys some questions. So one of the things that, so Samson Mow, you're Ugly Ghost's hero in many ways, but you're also becoming kind of an anti-hero right now in the crypto community. And I think this is partly because of your role with Blockstream, because of you're being kind of one of the big critics of Ethereum and a lot of the ICOs, which, there's many other critics. I've certainly criticized them myself. Can you explain to me what do you do at Blockstream? I mean, I kind of try to look it up. It's CSO. Is that like chief shit posting officer, or what's your role with Blockstream?
Chief shill officer. So my role at Blockstream is pretty broad. I oversee product development, business development, and marketing primarily. And Blockstream does a lot of things. We have a lot of different projects. We have the Liquid network. It's inter-exchange settlement network that lets you move Bitcoin and other issued assets quickly between exchanges, on and off exchanges. We have Blockstream Satellite. We kicked off Blockstream Mining shortly after I joined. So we are a mining hosting infrastructure provider. We have Blockstream Data, the cryptocurrency data feed, which we partnered with ICE to do. ICE is the owner of the New York Stock Exchange and Bakkt. And we have Blockstream Green, a non-custodial multi-sig wallet. But we have like a whole array of products. So I'm typically involved with most of them at any given point in time.
Gotcha. Okay, I finally understand your title. It's been very confusing to me for a while. So one of the things that people I think are that is driving this drama and this sort of controversy is that a lot of people, for obvious reasons, I think, got burned during the ICO bubble, right? The 2017 bubble, right? And so I wanted to ask you, as a critic of a lot of these sort of non-Bitcoin assets, and as a critic of a lot of the different things that came out of this industry, what's the problem with ICOs? What is it that went wrong there that hurt so many people?
Well, I think the biggest problem with ICOs is they're all vaporware. There is no project even. So it's based on a white paper. They raise a ton of capital. They scammed a lot of people, and then they disappear. Some of those projects have raised billions, and I think they still have yet to materialize an actual project. And we talked about this on the Peter McCormack podcast yesterday, but the ICOs basically try to dress up as legitimate companies, and they have boards, foundations, and they do all the things that companies try to do to emulate them to further the scam. And that's kind of poisoned the well. It's made people think that a lot of people in crypto actually may not have expertise with the corporate world. So they kind of think, having a board of advisors is a ICO thing, but it's not. It's a corporate thing, and there's nothing wrong with it. And you could even have companies nothing to do with crypto, like Theranos, putting together all-star boards, quote unquote, to help sell the scam. Like Theranos had the Henry Kissinger, James Matthias, and a whole bunch of other very prominent people on their board.
Right. So okay. So that, I mean, and one of the things about the ICOs is that there's a kind of asymmetry, in my opinion, in the ICOs, because they're usually, like, very often they were by anonymous founders, or sometimes pseudonymous, or people that don't have any kind of public persona or identity. And
that's
then
not true. Vitalik is very public and well known.
Vitalik is a counter example, right? And so you sometimes, what you got to do is you got to go for the influencers in order to get to the public, and that's obviously a strategy that's popular not just in crypto, pretty much in any sort of marketing or sales strategy today. You have to go through the influencers. What is so?
But okay, let's pause on that point for a bit.
Yeah.
So I think a lot of people on Bitcoin Twitter are very new, and they lack a lot of understanding of the background of the people that are advising INX. So they think that we are influencers, but we're not. So influencer for me is someone that is just known for being known. But I think a lot of us have just been in the space building a lot of things for a very long time. And I think Lop was brought on as an advisor because he has deep technical knowledge. He was a Bitco engineer working on Bitcoin multisig, and he's also worked on Ethereum smart contracts trying to emulate Bitcoin multisig. Whale Panda is a trader. He's a really good trader. And they brought him on, I believe, for his trading expertise, not just because he's a funny guy. And for me, I think it's because I was the COO at BTC China, which was one of the largest exchanges in the world. So we all accomplish in our fields doing various things, but people don't really know.
Yeah, that's interesting. I didn't know you worked at an exchange. Go ahead.
Yeah, no, I think everybody's obviously shell shocked by 2017, and this company was birthed at the same time. If we wanted to take the easy route to sell a shitcoin, then we would have raised in 2017. This wasn't an easy process to go through for 3 years. Back then, you could obviously everything was just throwing it up against the wall to see if it sticks, and people were selling absolute crap. And we recognized that this was an awful way to do it, and that's why this company was set up like it was set up. So we did everything that every ICO didn't do. We have an independent board of directors that governs our activities. We have audited financials, and the SEC, for better or worse, just put them aside as an organization. What they require us to do to get their approval is grueling. So just even if you hate them, and there I'll reserve, my kind words about them, what they require is absolutely immense. So we wouldn't have gotten to this point unless we jumped through 1,000 different hoops.
Can you give us a couple examples of like the most sort of the most clear examples of what these standards are, just to give people a taste?
Well, I mean, first of all, the token can't move between two parties unless they're both whitelisted. So we have to clear all of our AML KYC checks. Any tokens that we issue to advisors, and I know this was like a lovely sticking point, need to be subject to market independent valuation at market value at the time of issuance, as an example. We need audited financials, so all our financials are out there. Material agreements. My employment agreement is public. Every material agreement of the company is public. So these are just kind of some of the things. And then we have to deal with a whole gauntlet of other regulators as well for an IPO. We have to deal with state regulators. The parent company is a Gibraltar domiciled companies. We have to deal with Gibraltar regulators. So it's a little disconcerting that people think that this is like a scammy offering. This is absolutely 180-degree turn from all of these these shitcoin ICOs.
Right, and the reason that I'm interested in this topic is because I am concerned that there is a kind of I guess we can call it Bitcoin socialism to potentially ruffle some feathers. That there's this meme that's sort of gone through the community. At least I think to some degree it's Twitter's fault, because Twitter just sort of puts everybody in this little bubble of echo chamber, and then just everybody's opinions get kind of, you know, distilled and moved through like a warp speed tunnel, right? And they get sort of isolated from the rest of the world. But and this happens in like every topic in the internet, right? But gosh, what I was gonna, there's a point that I had in that general direction. Yeah, my concern is that there's a kind of anti-capitalism ethos in this, right? Like you need to raise equity, you need to raise capital in order to have capitalism. And the vehicles to raise capital are actually important, but obviously this ICO bubble was a big problem. So I also remember an era in crypto back when Let's Talk Bitcoin was popular, back when where we would talk about, okay, how do we deal with the centralization problems in the industry that are rising? And one of the ways you deal with them is with transparency. And that was before the ICO bubble. And then the ICO bubble happened, and transparency in that, in the way that they try to deal with it, didn't really save that many people. And then you guys are sort of bringing kind of a different level of transparency, which is going through the SEC, going through the requirements. So I think that's where sort of you're innovating. But for somebody that doesn't have experience trading stocks or owning equity, as myself, and I think as many people in this industry that maybe are maturing into that sort of that market, what is the difference between an STO and an ICO? What are the differences that they can see there?
Well, I think specifically, you know, we're a security, so we didn't try to take this this utility route that all these ICOs tried to do in 2017, which was basically a way to skirt securities laws, and it was a very easy route at the time. The vast majority of the ICOs in 2017 were done on the back of like you know, a few page legal opinion and a white paper that was vaporware and maybe like a simple, you know, investment deck. So if you do a Reg D offering to accredited investors in the US, it's a very low hurdle. So, you know, so the STOs, you know, we're not trying to skirt rules. We're acknowledging we're a security, and you know, and all the hoops we had to jump through to get to that point.
Well, the definition is a security token is a security. An ICO is typically a security trying to pretend to be a utility. So it's definitely the opposite of an ICO.
Okay, but let me just clarify that a little bit. So the ICO tokens don't have voting rights. They don't have, I suppose, any kind of ownership, right? They were generally basically like, you buy it cheap, you sell it high. That was sort of the play. Sometimes they would add like this sort of premise of this pretense of utility, right? Where they're trying to create some sort of demand for the token in order to try to pump the value of it in the markets. Do the STOs have, like the INX in particular, does it have ownership, and what would that look like? Or does it have voting rights? We know it pays dividends, so that's important. But what about the other sort of things that you would get from an equity or even from a stock, right? I don't know.
Yeah, sure. So, I mean, you know, you can really structure a token in a million different ways. There's a ton of different ways to do it. You know, we seeded this company. We've raised $7 million to date of private equity. Private equity has voting rights, like most equities, and then we created the token on top of that. We thought giving voting rights also to the token holders would have been too complex, and it would have created some issues with the different classes. So we gave them other benefits, which we think are very compelling. One is the 40% profit share that they get, which is a contractual right that we've signed an agreement to pay them every year. So that once we're cash flow positive, that goes out every year. Two, they get discounts on trading fees. Three, the cash fund that a large portion of the proceeds of the IPO are going to, the cash fund, the token holders get first rights to. So they're on a balance sheet, they have priority over equity to the cash fund. So In the case of liquidation, they get first rights to the cash fund. It gets distributed out to them. If we get acquired, if there's a change of control, they get the cash fund distributed out to them, pro rata, and also the token lives on with all of its rights. So so it kind of depends on your risk appetite and what you have in mind for how aggressive you are. The token, I think, people keep saying, that the token holders don't have like voting rights and things, and so we're stripping their rights from them. But, private equity has a 100% chance. There's a chance you'll lose 100% of your investment. We've given them a substantial, safety vessel here at this cash fund that should buoy the token value a little bit, because the shareholders are subordinated to the token holders in that right.
I'm a trader. Okay, I kind of like whale panda, but I'm not a whale. I'm probably a medium-sized trader. I'm a goat, ugly old goat. And so I am very interested in this. I have a high regard for exchanges. I've been victimized by a number of them. I probably lost more Bitcoin on exchanges than I've made on exchanges just through them closing down. So what is, I don't understand the advantage for me to have a token, to have a discount. What is the advantage of having a blockchain rather than me just, okay, I'll invest $2,500 or $5,000. I get a discount. Now my understanding is I can apply those funds and get a discount on the exchange. But why would I, if I'm going to get paid 40% of a profitable exchange? But why is a token really even necessary for that? And if you do have these tokens and I decide to redeem them for trading discounts, what's going to happen to those tokens? Are they reissued? Just exactly what's going to happen.
Sure, absolutely. I can answer all that. So the people that, I guess, whales or institutions that have the potential to pay a large amount of trading fees might, definitely see the utility in using their tokens to pay the fees. I think that the prospectus says at least a 10% discount, but I'm sure there'll be buckets, there'll be tranche, there'll be higher discounts. So I guess it depends what's important to you and how much you're trading. And, if you have $10 of trading fees a month or 10,000, I guess it really depends. Token holders might very well just want to hang on to them just for the 40% profit share, and that's fine too. To answer your question of where the tokens go, the tokens that get paid to us for transaction fees, 20% of those go back into the treasury, into a token reserve fund. So what that kind of has the same effect as a burn, in that it gets pulled out of the public profit share. So 20% of those tokens go back into a reserve fund, and so the public pool decreases over time. The other 80% will periodically sell back into the market as needed for cash flow. But in any case, there's a finite amount of tokens. There's 200 million out there that can't ever be changed.
Okay, so they will be essentially resold. I have a question. Since you're going to be registered, years ago I looked into. Had a company called Gold Standard Corporation. I actually was looking into offering gold insurance. I found it was impossible, because the regulatory requirements is I had to hold my reserves in dollars, or most of the reserves. As a SEC regulated exchange, do you have reserve requirements in dollars that you're going to have to meet, or can you keep it as an in-kind reserve requirement? How exactly is that going to work? Because I know when I went in looking into gold insurance, you couldn't do it, because basically, they had control over what you hold as reserve. If you look at Bitmex, everything's standard on the Bitcoin standard on Bitcoin. Everything's priced in Bitcoin. And so are you going to be required to do everything in fiat dollars?
So, okay, so a few things. So as far as the SEC is concerned, their jurisdiction here is over the primary issuance. Okay, so they weren't concerned really with the regulation of the operating entity. So the only thing that their concern was how the cash fund is going to operate, because we talk about it in our prospectus. Right. So when we talk about how the cash fund is going to be segregated and we can't touch it unless there's some kind of extraordinary event. So that's on the SEC side, what they were involved with. Then you have the operating businesses. If you're a cryptocurrency trading, you roll up to the state money transmitter authorities. So every state has different rules. A lot of them require surety bonds for the business. So it really just depends on state. And then the third part of the tripod is the security token business is the FINRA side. So then you have to have capital reserve requirements for FINRA, which I think starts at $250,000 and kind of goes up depending on your operating cash flow.
So it's a dollar reserve then, and really you are going to be required to keep it. That was my.
Yeah, I mean, yeah, there is no chance that FINRA would get comfortable with a Bitcoin reserve. We're maybe 50 years from now.
Samson, right. I tweeted out, you did a great interview. I think it was with, anyway, you were with Vitalik, and I think, I made a little shorty of it because you kind of nailed him about, on Infura. And I don't know anything about the back end. I'm really ignorant on that, but you basically nailed him on the fact that if Infura is hacked, Ethereum is dead. So if Infura is hacked and Ethereum dies, what happens to INX?
Well, yeah. I don't think it really matters. A lot of people are saying you built this on Ethereum. They didn't build it on Ethereum. They had approval from regulators to use Ethereum first. And one of my motivations here is to migrate INX off of Ethereum onto the Liquid network, which Alan hates every time I say, but that is true. Like that's
every day I get a text from Samson.
Yeah, that's one of the reasons. So I can't promise it'll happen, but I am working towards that. So for me, the involvement with INX is, do I want a security token exchange, or do I want to not touch it? And I think I want a security token exchange to exist. So I'm a big believer in security tokens. We have a product at Blockstream called Liquid Securities that actually manages security tokens on top of the Liquid network through multi-sig contracts. And I think if Ethereum does go away, which it probably will, then it doesn't matter. INX can always issue on another chain, just like Tether is on multiple chains. It's not bound to any one particular chain. First and foremost, it is a security, and then it has rails that it will move on. And it doesn't really even matter at this point because there are not other security token exchanges to move it to. So we're a couple of years or maybe a year away from that at this point. Most people will probably just leave their INX tokens on exchange at first. And
yeah, it's the thing is, it's pretty highly irrelevant what rails it runs on. Unfortunately, as you go through the regulatory process, you get less and less blockchainy and decentralized. It forces you into the centralized world and becomes absolutely the polar opposite of Bitcoin. So, and that means that I have to have a lot of protections in place. We're going to use Ethereum as a record keeper for, where the tokens are and who owns them. But we also are going to have redundant records with a regulated transfer agent, which is TokenSoft. So if Ethereum totally imploded and there was a catastrophe, we can totally switch protocols out. That's why it's absolutely irrelevant, really, what we're on. I mean, it wouldn't be like an easy task, but we have all of the records totally redundant in two places, and we can switch protocols. So that's why it's just the rails, and the regulated environment just forces you to have protections in place that make it totally viable to switch protocols.
Yeah, so one of the key differences here is that the ICOs they try to be decentralized, and they pretend to be decentralized, whereas an STO is centralized, knows it, and plans for it. So you guys have a a copy of all the owners, right? You have a private record, a private ledger, essentially, right? But so why launch a token at all? Why not? I mean, I think this is the question that needs to be really tackled from multiple angles. Is why launch a token? Why not just launch a stock on the market? And what is the point of having a crypto token at all if you can control, if it can be freely traded, and and you have this kind of platform risk that may or may not be immediate, right?
Mm-hmm. So I think that it comes down to, do you think the current system is good? If you think the current legacy financial system is great, then yes, we should just continue with it. But I believe, and a lot of others also believe, that it's not that great, and it's overdue for an upgrade. And I think that upgrade is using technology like a Bitcoin sidechain, or temporarily you could use Ethereum. But it is an improvement over what we have now. So famously, I think you guys probably know this, there's the Dole Foods issue with having more shares than actually existed. So their shareholders had 33% more shares than there actually were. And the reason you can get that kind of situation emerging is because you have multiple databases. As a trader, Old Goat, you have a record in your broker's database, who has a record with the DTC, who has a record in the database of the issuer of Dole. And when you have multiple databases, then you get this issue where there are more shares than actually exist. And that's not easily fixed. And we have the tech to fix that, which is something that is like Liquid, where you have one source of truth. You can have a backup of it. So TokenSoft could also keep records too, but you could have one primary source of truth, which is the chain, and the chain will independently enforce that. So you're kind of, you basically have paper share certificates again, but they're tokens now. And I believe that is a big benefit. There's also privacy benefits. In the legacy system, your information is just flowing everywhere. Your broker has your information, DTC has it, and I think this is a step in the right direction, which is improving financial privacy. So you don't have your details and the ability to be front run just out there all the time.
I mean,
So
lucky for a lot of people in the fintech space. I mean, the legacy system runs on technology from, 50 years ago. Mm-hmm. I mean, I'm sitting here waiting for international wires to come in, and they just get lost into cyberspace, and with no answer of where they are. So, it's I mean, you still have machines that use Fortran and stuff in the legacy space. So, there's tons of room for improvement. We never claim to be decentralized, and I think what's getting lost on people is, we're just launching a company on the rails of Ethereum. So, and you can still benefit with a centralized company, peer-to-peer transfers 24/7 all over the world, and not be decentralized, but still have all these benefits.
So right now, Ethereum is better than the stock market. It's sort of,
well, the thing is, like, it doesn't matter at this point, because most people are not going to even take their coins off of exchange. They'll just leave it there. So you don't even need to use Ethereum or touch Ethereum unless you want to move them off into, I don't know, a ledger. But it doesn't really matter at this point.
But it's a standard. It's kind of standard. So you can standardize the accounting of these tokens.
I mean, when I looked at this thing, I didn't know what to make of it. And then I read all the tweets on it. And then I kind of came up, the way I wrote it in my article, this looks like a corporate bond with a utility token attached. And I don't know if that was, I think that was a pretty accurate description.
Yeah, I read your piece. I don't think it was very far off, really. This is like a new asset class. It kind of, it's like not debt, it's not equity. It's what we used to call in the old days dequity.
Okay, it kind of has components of both. Stock, maybe something like that. But then the old question comes up: why do I need this preferred stock or this bond to get a discount to get a discount on the exchange? It'd be like I have preferred Netflix stock, and they say, okay, you can get a discount on Netflix by giving us your preferred stock. And what is the utility of having a blockchain in that sense?
Well, I think to address just a comment about the discount and you know, and like the incentives, you know, it's the way that we constructed the whole ecosystem for ourselves, that we see the community as very, very important to our success as the token holders. They're pretty essential to the success of the company, because they get a profit share. You know, we believe that they're of course incentivized to drive business to the exchange. So you know, we'll give them whatever kind of other benefits, kind of suck them into this community, you know, aspect.
Okay, here's where I got a problem. Okay, I use Bitmex because by far Arthur Hayes has taken an exchange to a whole new level as far as the innovation that he's done. There's nobody's come close, and I've been in this business for since, you know, 1973. I was registered. I wasn't registered. We didn't have to register. I was a commodities broker, and I mean, the problems we used to have were just incredible. And he's done away with almost all of those things, and he did it without a token. And there's other very highly successful exchanges. And what I see is I use that because the exchange is so far advanced over everything else available. Are you really going to be able to compete, you know, with these basically entrepreneurs that have figured it out? You know, they really have taken the thing to a new level. And I kind of use the analogy of, I had a friend that, you know, he was a star salesman in the roofing business, and he got it. But the difference is, you know, he knew the business, and it had nothing to do, and his customers were already his customers. And so I'm here. Why should I use your exchange when you're just starting out? And how do I know? And you guys, look, if anybody has integrity, you guys do. I'm not questioning your integrity in any way, but it's more than that. To run an exchange, you can be the best back end guy, and you can, you know, have experience in the you know, the established exchanges. But what's going on now? The exchanges, the guys that have succeeded in these exchanges have really taken it to another level. What makes you think you're going to be able to compete with that?
Well, I think for the most part, you have two totally different target audiences. You know, I think that probably a lot of our target market is not going to be people that are going to put their money in an unregulated offshore exchange. I mean, that's just it very simply. You know, you obviously have a lot less, you know, a lot fewer hurdles as an unregulated exchange, but a lot of the people that we're going to target, I mean, want a regulated exchange that they can kind of trust that there's, you know, there's a cash fund there that will actually be there in a segregated account, that you know, that the company's not going to have to jurisdiction hop to Malta or something because regulators are chasing them. And, you know, there's just some protections in place that the company's not going to disappear tomorrow.
And you guys are going to be trading assets other than security tokens, right? You'll be trading some of the top cryptocurrencies, I guess, to call them currencies, but and then also eventually you want to move into derivatives, which I presume as you're talking about futures and so on.
Mm-hmm. Yeah. So for the first stage of the company is about 6 months after the offering, we're going to start trading the cryptocurrencies. So Bitcoin, Ethereum, Zcash, Litecoin, and a couple others. And then the phase after that will be security tokens. So yeah, the first thing we're going to tackle is the cryptocurrency trading. Bitcoin will be the first one for sure.
So I think you also have to look at it from this perspective. Bitmex has been operating for 5 years now, right? INX took a regulated path. It took them more time to get their approvals and licenses, and they're aiming for a totally different target market, but they also need to raise capital to catch up, right? It's not like they can just bootstrap it in this current environment and hope that it goes well. That's the whole point of raising capital. So you can offer a chance to investors to get in at an early stage and possibly partake in the upside if there is upside. And I think they've made enough disclosure to make it seem like it's not a sure thing. Like most of the language in the perspective is like, you know, be very careful, don't invest too much and you might lose your money. It's very much a disclaimer. So I don't think they're scamming people in, but they're giving people the opportunity. And you have to kind of think like that has typically been VC capital in the past, and now they're opening it up and letting, accredited, and I think the accreditation rules are loosening too. So you have a wider audience that can now access and invest early and have those same potential early gains as typically reserved for VCs with big names.
Is it fair to say that the real advantage and that you guys have done here is, number one, you can kind of ride on the coattails of the SEC, which my mentor really warned against. And number two, you're riding on the coattails of blockchain that's really not necessary. And I mean, I get it if that's what it is, but it seems like I'm trying to get at the substance of the token.
Well, you get 40% of potential revenues if
I
you
get
make
that,
any money.
But why do you need the token? Except that's where everybody's mind. Except we have this crypto world out there that everybody jumps to. And I guess that's what you have to do to raise capital. That's what you got to do nowadays.
Well, as opposed to what, like using like a database or something, as opposed to a token?
Database, or just raise. I mean, say, preferred stock issue. I buy preferred stock.
Yeah,
and just saying to them, I don't need the token, and everything else can be involved.
Yeah, so let's hit that point a little more. So let's forget for a moment that it's on Ethereum, despite that it's on Ethereum. Let's assume that one day it'll be on Liquid, which we all want in this room.
Yeah, everybody wants that.
We all want it on Liquid. Why put it on any blockchain at all? What are the benefits? What are the costs? What are the risks?
So it goes back to your earlier point, like you could use a database, but I don't think a database is efficient. The whole legacy system is inefficient and outdated. I think, like for Blockstream, we've been investing in sidechain tech for a long time. And a part of that is the ability to issue assets. And I've been saying, at various conferences over the past 5 years that I think the only real decent use case for blockchain technology is financial markets. People try to do logistics with it and even stuffing data into the blockchain. I think that's just stupid. But I've always said, and I've been consistent about this, that financial use cases are a great use of blockchain technology. Like if you look at Liquid, everything is encrypted. It's confidential transactions. The asset type and assets amounts are blinded. I mean, isn't that really good for issuing a security token or even any other instrument? Because now you have privacy. You can't be front run easily. And it's just far better than anything on the current market. It's going to be very difficult to upgrade the entire current backend of the financial markets just because the incentives are very perverse. Like a brokerage can lend out a stock that they don't have, or they can even use a stock they don't have to short, so naked shorting. There's just a lot of things they can do. They can lend shares multiple times to different people, and you can't do that if you have a token on the Liquid network, because anybody can run a Liquid node. You can enforce the rules. You can ensure that they're not printing more. You can see the issuances and burns, even if they're confidential. So it's like the perfect mechanism to create fair financial markets. And that's why I keep saying security tokens will drive the reformation of capital markets. If you look at the things that Blockstream is doing, you can kind of figure out, if you're smart, what our end game is. One of our end games is to make the entire financial market a dark pool.
Yeah, I mean, it's in the current world, I mean, it's to not have 24/7, 365 trading. It's just. It's kids these days, they don't understand, like, the market's closed at 4 o'clock. Why can't I trade 9 a.m. on a Saturday? It's the new world, and you can do this in an automated way with encrypted information around the clock across borders.
Mm-hmm.
In a safe way.
You're definitely not ending all wars and saving dying babies. So you're not going to be competing with our good friend Roger Ver, I think.
We don't claim to save any babies. That is not in the prospectus or marketing materials.
Yeah.
Well, guys, I kind of get it because, like I say, I was forced to, become a registered commodities dealer when originally it was completely unregulated. Mm-hmm. And within a year after that, they started, or a couple of years after that, they started the commodities options market. And so to trade those options, I had become a Series 7 dealer. So in that sense, I'm very sympathetic. I get why you're doing it. And I just, my question is it necessary? And in other words, I don't judge. I really wish you well. I'm not judging you because you're SEC regulated. It doesn't give any more points in my mind, but you are, all very reputable and seem competent in what you're doing. That does not necessarily translate that you're going to have a functional exchange. So that's the risk, if we decide to participate and get these bonds or preferred stock with the utility token. Yeah. That's the way I see it. And is that fair?
Yeah, I think. I think it's a speculative investment. I mean, obviously, an SEC wrapper doesn't mean anything. I mean, Enron was one of the largest companies in the world, and look what happened to that. Right. So there's always risks. And yeah, I mean, with the SEC, I think probably the important thing is the transparency that goes into a 200-page prospectus that unfortunately nobody reads, and the hoops we had to jump through to kind of get their sign off on probably the most scrutinized prospectus in modern times.
Well, Alan, you need to touch on the tech team. I think a lot of people think that there is no product, but you've been building the product for years now, and you just haven't shielded it yet. But there is an exchange, a functional exchange, and your tech team is coming from the financial world, and they've built exchanges in the past, right? You need to shield better.
Yeah, no, I mean, absolutely. Thank you. We've been building the technology for 2 years. The founder of the company, this isn't his first rodeo. This is the third time that he's built a matching engine and a platform for the public to trade on. His name is Shai Datika. He's based in Tel Aviv. He built an options exchange for the public. He onboarded 3 million different users. He had an FX currency exchange. Our CTO is Paz Diamant, who built a crypto platform for eToro. And all of our dev team is Tel Aviv based and now has cybersecurity and blockchain experience. So I'll kick out some screenshots of the technology soon so people can kind of get a tease of what it looks like. We think the platform is awesome. We love it. Unfortunately, the process of the SEC basically have to totally shut up during the whole process, and so we haven't had the time to kind of shill things hard. But yeah, things will start coming up faster.
All right. So I have another question that I still haven't found a good answer to. Who is allowed to buy this token? Because I try to buy it from Mexico, and it shut me out. And there's some stuff on the website about the license is only available right now in about 7 states. So what does it take to actually buy this product? What's the barrier to entry?
Yeah, and I'm actually, that Mexico comment kind of surprises me because I'm almost positive that Mexico's in there. But to answer your question, it's just like the SEC. We have to go through the blue sky process in every state that we want to register in. So I believe that's about 12 states that we got through that process. It's another grueling process. I think our states that we're in cover about 35% of the country. So California, Illinois, certain states are accredited investor only. Outside the US, we're covering many countries to professional investors only. So that's kind of like the equivalent of accredited investors outside the US. But there are many states many states have we're selling to the general public in many states in the US.
Okay, so it's a state question whether or not you have to be an accredited investor in the United States to trade and to buy the token and trade in the exchange.
Right. So I think like 12 of the states are selling to the general public, and 3 to 5 are accredited investor.
Okay. How about if you're foreign? Like I'm a resident of Mexico, a U.S. citizen, so I really have no state of residence. I still have to pay federal taxes and all that, and because I'm a U.S. citizen. But I did the same thing, and I was shut out. So here in Mexico, I couldn't even get through the gate.
Right.
Yeah, please. Yeah, let's talk after, because that sounds unusual to me. It goes through it goes through the on-FIDO system for AML KYC screening is the first thing. So it's going to take a selfie and your ID and your address verification. It's going to try to match up all those things.
Right.
So if you kind of don't have like a ID and a proof of address in the same place, it's probably it's probably not going to work. But yeah, definitely let's talk after.
I KYC almost everywhere because I'm a professional trader and pay my taxes on my gains every year.
All right. Before Tone Base leaves the chat, because he's in the chat asking some questions, and some of them we already went through and so on. I want to ask a question that they kind of brought up in the show today, and I want you guys to help me understand what the thinking was here. There's this screenshot of a part of the website which I haven't found. I went looking for it and I couldn't find it.
Oh yeah.
And this one's pretty funny. Let me see if you guys can explain this to us.
Yes, you liken the token of the incarnation of the Lord.
Yeah, so we have a chart here, and the chart is comparing three particular things in history. One of them is the birth of Jesus. The other one is equity and the equity bubble of East India, which is not a great example of good use of equity. And then security tokens. Why?
That is definitely
Bitcoin, frankly.
The birth of Jesus is definitely not on our website. Yeah, it's a good. I hope we become the Fire Festival sandwich photo of charts, because there's a good one that has me on the chart actually, which is actually better than that one.
So this is an actual chart. The birth of Christ isn't actually one of the categories here.
Yeah,
because it was legitimately presented in the Tone Base show, so I'm very confused.
I'll reserve my comments on that.
No comment.
Okay.
If you have more questions from Tone, then get them out to me, because I'm not going on his show. So ask him here. I'll answer any of his questions.
Yeah, actually, there are some other ones.
You gotta hand it to INX. Their marketing is brilliant. The whole LOPS thing, not your mama's ICO, that's from the marketing agency.
Okay. No,
I guess we dismiss that as a great troll then.
All right.
The other question that he asked, which I thought was good, was the scarcity of the INX token itself. Is it technologically capped or is it regulatorily capped? Like, do you have a legal obligation to not create any more than 200 million tokens, or are you trying to enforce this technologically?
It's capped in both ways. It's capped from a regulatory standpoint. If we wanted to issue another security or more tokens, we'd have to revise the document. So it's capped from a regulatory standpoint, and it's capped from a technological standpoint. We can't issue any more tokens under that smart contract. It's already been deployed and everything.
But you have an admin key, right? Like you have an administration key of the.
But not to increase the tokens. We can't. It can't be.
You can't. You don't have.
No. Not to increase the number of tokens.
So this is why you should do it on Liquid. With Liquid, you have an issuance key, and you can destroy the issuance key after.
Right. Yeah, I think that's probably a suspect. Like, I think there's I'm not programmer, but I'm pretty sure, like, what I've heard is that these admin keys have pretty significant power.
But again, we keep falling back on the regulated part.
Right.
We have redundant records of everything. Nobody's going to create tokens into perpetuity and drop them on the markets. It's virtually it's impossible. So, those tokens were created under technical and financial audit. The contract was deployed under an Ernst & Young audited process. But it always falls back on the regulated part. How is you have a regulated transfer agent and the Ethereum network that have redundant records of the tokens. So how are we gonna game that system? It's impossible.
Right, like you are centralized, and so and all the people in your company are sort of visible, right? And so even if the Ethereum contract got hacked, right, and then the supply get increased, I mean, that those shares will not be honored by the sort of the actual legal record of ownership.
Yeah, I mean, yeah, it's like, for better or worse, the centralization, and we're not claiming it to be decentralized, but the centralization just puts all of these safeguards in place, right?
Yeah. Plus, Alan can
like,
call Vitalik and say, roll it back.
I mean, not to mention it. I mean, if
I'm as an INX investor though.
Yeah, it's
dropping some shares.
It just can't happen. We have the ability to blacklist tokens. We have the ability to kill tokens. We have the ability to roll back transactions. So, this is the ERC 1404 benefits. So it's there's no way for these things to occur. It's practically impossible.
Okay, let me ask another. Maybe it's the same question in a different way. It seems to me like one of the ideas behind this is to get these tokens out to as many different people as you can, to kind of, build, like you say, an XRP kind of army, or rather than get 10 whales and say, okay, we'll support the exchange. We understand trading. Give us a discount on trading. We'll help make the market, and we get a 40% kickback. So, to me as a trader, that, because I want the value of really a top-notch exchange, and not the value of a whole bunch of people promoting something. In other words, it's the underlying, and that's my, and hopefully, I mean, you'll develop the best exchange that's ever existed. But that's one of the things in the background of a lot of us, what is this? Why do you need a blockchain to do this? And I don't see any reason except that it helps to promote it more.
I don't think it helps promote it at all. I think I think there's, like, we've covered this a couple of times. Like, there are a lot of benefits to using a blockchain in financial applications, and I can touch on some more points. Another point is that you actually have a bearer asset now. You can have an atomic swap. You can have peer-to-peer trading within the whitelist. So, you can actually do an atomic swap. Like, Alan and I can trade our INX shares for something else, and we don't have to involve the exchange. It just opens up the door to a lot more freedom for people to do what they want with their asset. You don't need to necessarily trade it on that exchange if you don't want to. You can trade it peer-to-peer. What else is there? There's the program.
Before we move on to that, so you're saying that on Ethereum right now, the argument for using a blockchain is that it's publicly auditable, assuming that you can sync the Ethereum node and actually get the balance.
Well, nobody syncs an Ethereum node. You just trust in Fira, right? But that's why we need to. That's why I keep pushing Alan to move to Liquid, and I think I'll get him there. It just takes time.
I mean, there might be a legit security argument for doing this, right? So maybe that's the way.
Obviously, Ethereum is an inferior temporary solution, right? It's not the end game. The end game is to use better technology. And I think the better technology is the stuff that we're building at Blockstream. Like, a lot of people are excited about atomic swaps, right? A lot of people are excited about simplicity. That's a smart contracting language we've been building for, I don't know, like 5 years. So people are interested in this stuff and the new methods of exchange they enable. But, like, what would you make a smart contract for if there's only Bitcoin? Like, am I gonna create a Bitcoin smart contract to sell you 1 Bitcoin for 0.9 Bitcoin? I don't think so. I think you're going to trade it with another asset. Either it's going to be a stable coin or a security token or something else.
Well, I do appreciate the amount of effort and work you guys have had to do to get it registered.
Yeah,
we definitely, I mean, you guys deserve, people say, they have a 10-to-1 advantage. And I don't think people understand. I do have an understanding. And I think a lot of people that are in the market and in the security business, they understand. You really have, in that sense, it is a milestone, because it was a lot of work for you guys to do this, and you didn't have to do it.
I appreciate that. Thank you.
The biggest question is the blockchain really necessary to do it? And I guess the verdict's still out on that, but Samson Mow made the case, and we just leave it there.
It's not necessary. Nothing is necessary. Like, we also get the feedback, like, well, why didn't you just not build the exchange, right? You could always not launch the product and build the exchange too. But obviously, we think there's value to having this exists and serving the U.S. market.
Okay, so you do think it's a superior way? Well, I hope it is. I really hope it is a new innovation.
I mean, are you guys concerned about the ease of use, like the customer service complexities that you might be creating here, right? I've never traded stocks, right? But I'm assuming that today I have to go to a company that probably has a web portal. I believe people trade it on TradingView somehow, right? Through a broker. You got a KYC, you have an online account, and then I can actually start making trades, right? And now with INX, I have to do all of that, plus get an Ethereum wallet where I can hold the token, assuming, or put it as a custodian, like use you guys as a custodian. So now there's sort of that extra step.
Right, but you don't need to, you can come trade Bitcoins on the exchange and never own our token. It's not compulsory. You can come trade, Bitcoin, Ethereum, whatever. I mean, it's just like setting up any other account at a brokerage or whatever. So you're not required to the using the tokens to get a discount and stuff. I mean, it's an added benefit, and there'll be other kind of like promotions for token holders, but you're not required to own an INX token to trade on the platform. Absolutely not.
Yeah. A point that's being made in the chat is that this isn't a bearer asset, because bearer asset is where ownership is not registered. And as you described, all the rights to transfer and even keep these tokens are subject to regulatory compliance. So it's not really, it's sort of like you have the token, but you don't have full control over it. Right.
Yeah, I mean that's
really
this is the regulatory world. It's impossible to do a not your keys, not your coins. It's just it makes it very difficult. I mean, our tokens you can take offline as your own wallet. It's that's fine. You can take it out. You can do it on a ledger with my Ether wallet or something. But as far as us having the ability to change things, it does exist.
Right.
Mm-hmm.
I mean,
it's
I think
closer to a bearer. It's closer to a bearer instrument than what we have right now. And I think you cannot just say it's not perfect and therefore we don't do it. There are steps needed to move the needle gradually, right? If we can get financial markets, all using liquid, then that's an improvement in privacy. It's kind of like a dark pool where nobody knows what anyone is trading. A lot of that regulation that we're seeing right now, the overbearing, burdensome regulation, is an effort to protect people, and that's because there's information asymmetry. But if everything is private, maybe that regulation will lighten up. Like, things change over time. It was difficult to do a security token in the past. Then you have Reg D and then Reg A+. There's a lot of evolution on the regulatory side that is making this more mainstream, if you will. And I think we have to be practical and pragmatic and take the steps needed to get the regulators there. But at the same time, you have Bitcoin, which is completely decentralized, immutable, and that's a good thing. But if you can find a way to bridge the two things together and have all the traditional securities settling in Bitcoin because they're issued on a Bitcoin sidechain, and you can create Bitcoin transactions essentially to swap them and trade them, and Bitcoin smart contracts using simplicity, I think that's how you get hyper-Bitcoinization, right? Hyper-Bitcoinization is not just going to happen because people are DCAing, right? It's got to be bigger pools of money entering the market.
Yeah, I don't think a lot of people get that. They want to become wealthy with Bitcoin, but the money is in society. The wealth is in society. Like, money and wealth and all these different financial assets are kind of stores of energy, and that energy is in society. If you want that energy to come, you have to engage society at some level. But okay, so let me just see if I can
can I add one more thing? So
sure.
Like, we're already seeing this transformation of capital markets. The MicroStrategy bought a chunk of Bitcoin, 250 million, right? Imagine if their stock was a security token issued on INX. And this is why I invested in INX at personal risk, because I think having that venue, being able to cater to that market, is a big step in the right direction. Everything is going to settle in Bitcoin eventually, but it's not going to happen just by wishing. It's going to be people working, building, and getting regulators on board.
Yeah, I mean, from our perspective, if we can bring people into the ecosystem because there's no other way they will trade unless doing it on a regulated exchange, then that's all the better. I think you just need to bring the people, and if I can get a few people into Bitcoin just because they're on the exchange as a customer, then that's great.
Guys, the way I sum it up, I got to keep things real simple because I'm not real bright. So I always have this little thing that we do, and that is we hodl, and everybody knows what that is. And then I call save, which I spelled SAYVV, which is an enactment, a distortion of savvy, and that's when you reward yourself for hodling. And then the last thing you do is we build it, and we build on Bitcoin. And I really see that as an effort on your part. Whether there are a lot of questions about it, I think you addressed a lot of them. I'm coming at it from where my mentor comes from. I see the SEC as a political beast, which it really is. And I could take my hat off to get regulated because I know it was not an easy task. So we might have our differences, but I do really wish you success. And I hope you're right. I hope this is opening up the avenue for hyper Bitcoinization, because I think that's what we're all going for.
Yeah,
so,
for sure.
Like I say, thanks for being on the show.
I still have a couple questions, but definitely thank you for being on the show.
If you guys don't mind, it's up to him.
I think we're close to done, but I just want to summarize this whole blockchain thing and use the token. So one of the arguments that I'm hearing is that the reason to put this token on the blockchain instead of using the stock market or instead of doing private equity is because you have a standardized infrastructure that where you can deploy and there's a transparency argument because you can look at the contract, you can look at least at the public addresses. Is that accurate? And what else would you add? Because I think we got to talk about this thing.
Yeah, no, I think you covered a lot of the points. There's interoperability with other parts of the ecosystem because it's it's an Ethereum standard, for better or worse. There's auditability. Shut up, Samson. There's and it's kind of all the things we discussed before. Private equity, this is a liquid instrument that we're trying to put out here to, hopefully be on secondary markets and trading. Private equity by definition isn't liquid, so that we didn't try to go that route. I don't know. There's many different reasons. The 24/7 trading, peer-to-peer, borderless. There's the whitelisting. Right?
Yeah, it's not borderless because you have to be in a regulated jurisdiction that like a compliant jurisdiction in order to own it, right? So it's not borderless.
As long as the sender and receiver of the token are both whitelisted by us, it doesn't really matter where they are.
Right.
And you're
trying to be able to sell in and trade in Mexico and other countries. Or you have global ambitions, right?
Yeah, we're selling in many. The IPO is in many countries outside the U.S.
Yeah, because
we had a
couldn't get
investors.
Oh yeah, that's good. Yeah, I just get knocked out.
Was able to participate.
Okay.
All right.
That's really great. I mean, the last question that I have, which I think is, I think this is genuine innovation. I think is exciting. I think capitalism requires capital, and I think there is plenty of risk here. And this isn't something that everybody should get into, and they certainly shouldn't get into this blindly. I think the marketing, we gotta be. Well, I mean, not you guys. I think Jameson Lobb's sort of tweet kind of pissed me off because it was like guaranteed profits. It's just like there's no way to give that proper context on Twitter. There's no way you can make that not sound like ICO chilling.
It's legally guaranteed, not functionally guaranteed.
Right. Yeah. If lightning bolt hits in the right place, nobody's getting profits.
No,
right?
let's just say it's contractually obligated to pay out the profits.
Yeah,
I get scared with the guaranteed anything.
You open yourself up to litigation and lawyers is a whole new ballgame.
Yeah, for sure. Okay, last question. There's something about micro securities on the website. There's a video about investing on one of the Tesla cars, but not the other, as a sort of possible application of the security tokens, like the sort of micro security application. Can you talk about what that looks like, and maybe what else, what can you share about where that part of the market's going to go? Because I think it's interesting. It's great.
Yeah, well, I think the whole idea is you can structure security tokens in a million different ways, right? I think kind of like the first use case that came to market is real estate. So you can have kind of like fractional ownership in a hotel property or something, and that'll probably branch out to other illiquid assets over time, to artworks, or you can maybe have like a group of commercial real estate properties, and you can fractionalize that and sell it out so that the general public can have a little piece of like a shopping mall or something. And there's like a lot of different applications, and then you can extrapolate that into things like you can tokenize a certain project at a company or something, or ownership in a patent. It's really, it could be a multi-trillion-dollar market of possibilities. It just it kind of depends where it goes. Right now, it seems like real estate is the first thing to take hold, fractional ownership of real estate. But yeah, it's sort of like the sky's the limit. There's a lot of different directions this can go in.
Like a video game publisher.
That's right. Yeah, so I think that's a little sign of what's to come, perhaps in the future, right? You're gonna launch some stuff on the exchange, Samson?
Yeah. Well, we're doing a security token for Infinite Fleet. So the entity around that is a video game publisher, and that will share 20% of profits. And we also have essentially made the token like an equity. So upon any liquidity event, then you get a share in that too. So it's like INX's token, but a little bit different. But I think we'll see more different permutations of these things as time goes on, as people get familiar with security tokens and what they can do and experiment with it.
What assets is this reserve going to be held on? I'll just finish with that one. Because if you're holding like dollars, that might be a problem, right? So
that's an Alan question, right?
Sorry, the cash fund?
Yeah, the cash fund. Yeah.
Yeah, it's gonna
dollars,
it's gonna be in dollars. There's no other way around that.
Does it have to be dollars, or could it be like
regulated? It's gotta be dollars. That's
you can't put it on an index, like a stock index or something like that, or like if Grayscale apparently is launching like a crypto, some sort of financial vehicle, you can't just add some. I'm sure you've thought about it, right?
I mean, the idea is to make it as safe as possible. We can have different opinions about, US dollar versus Bitcoin long term, whatever. But it's because of the nature of the fund and because of the regulated structure. It's got to be there won't be any stocks in there or anything else. It's going to be US dollar and ultra short maturity interest bearing kind of things, but very it's in the prospectus. It'll be very stuff. Yeah.
So it will be interesting to see how a regulated exchange competes with all these unregulated exchanges. I am looking forward to that. That's going to be.
I think so.
I mean, you guys have a big uphill battle, but I do wish you well. And
well, thanks for having me on. I really appreciate it.
Coming on.
Yeah, thanks for coming on, guys.
Yeah, thanks, guys.
You are building on Bitcoin. That's the whole thing. That's at least the goal, and it's kind of by default. I never wanted to become a registered securities dealer, but I had no choice if I wanted to stay in the business. And so that's kind of the way things are, particularly, if the United States maintains itself as a world power. They've got their fingers everywhere.
Right. Yeah, that is yet to be seen too, where the reserve currency goes. So yeah, that'll be interesting.
That'll be for the next generation, not for this one.
That'll be the next leg up for Bitcoin. With that upheaval.
I'm really glad I met both of you. Again, Samson, you're one of my heroes. I love the way you handle Roger Ver. and you seem to have a lot of fun in what you're doing, and I do too. It's really important to have fun, and so I try and keep it simple. We'll do my little dance again.
That's
what
right.
I teach is I teach you hodl,
Promise and you'll
and
deliver.
you save, and you build and that's sound money. So here we go. You ready? We go hodl,
Yes.
hodl, hodl.
Save.
Save. Build a. Sound money. Sound money. All right.
There we go.
Thanks, guys.
Thanks
That's
for having
nice.
us on.
Yeah.
Cheers.
Thanks.
Yeah.